I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. How are you doing?
Well, we're doing great in Vancouver. A very nice fall for us.
It's a little warm here, too. I'm in Virginia.
Well, Virginia's for lovers.
That's right. That's right.
And you're not going to change that slogan, are you?
No.
Mike, taking a look at what's happening on the markets, you said there are some troubling stocks in the NASDAQ 500 that you should keep an eye on if you want to make sure you have an eye on everything.
Yeah. One of the things I do is I look at how sectors of the market and individual stocks are performing relative to the stock market indices that everyone pays attention to, you know, the S&P 500, the Dow, and the NASDAQ. And typically, when the market has a big pullback, the stocks and the sectors that hold up the best during the pullback then assert leadership and perform better. And then the opposite happens when the market has a rally, which is what we have seen over the past couple weeks. The sectors and the stocks that perform the worst on the rally don't go up as much as the rest of the market, tend to then fall into very deep trouble when the market tops out, and just even if it has a 10% pullback, they tend to really fall really bad, and if it's a bear market and you get a big leg down, they get devastated. And I still think we're in a bear market. And one thing about the stock market, it's really interesting, is this year was marked by very low volatility in the stock market averages. It was in a very tight trading range until the very end of August, when the market had a big plunge down over the space of 5 days, about roughly 10% in one morning. In fact, the Dow gapped down 1,000 points. It recovered that day, but it was a crazy thing to witness. And that event, it took people by surprise. It took me by surprise. I was thinking the market was going to pull back, but nothing like that. But it happened. But the thing is, everyone's forgotten about that. And we've had this big rally over the past couple of weeks, and the market fell below the 200-day moving averages in August and September, and is now rallied back above it. And people are now extremely bullish on the stock market and think it's just going to go up and up and up forever. I think that's a mistaken view, because in bear markets you get big drops of 10, 15, 20% even, and then rallies back up to the long-term moving averages. And once you reach there, things will peter out in the bear market, and you can see the market go sideways for a couple weeks or even a month or two, and then start to go down. A lot of your listeners I know are familiar with gold and mining stocks, and that's the story that took place there since 2011 through this year, really. Market going lower and lower and lower, but punctuated by big rallies up to the 200-day moving average, which would make everyone get really excited, and then it would top out and go back down. I'm bullish on gold and mining stocks because bear markets don't go on forever, and we did see something of a crash take place in mining stocks on July the 20th, and then a rally back up to the 200-day moving average. And now gold, since about 2 weeks ago, has pulled back from 1180 down to back around 1100. But the mining stocks are performing better than gold, which is historically a positive. So I think we're in this base building phase when it comes to gold and the mining stocks, which will ultimately lead to an upside resolution. And the thing is, though, that what I want people to understand is the rally that happened in gold and the mining stocks, the last rally, it went up to the 200-day moving average and petered out, and now we're pulling back. To complete a transition into a bull market, gold and the mining stocks will rally again. They'll recover from the drop of a couple weeks ago, from 2 weeks ago, and then they'll rally back up through the moving average and have a real sustainable rally, and that'll be a sign that they're entering a new bull market. I think that's what we can look forward to. But when it comes to the stock market, the U.S. stock market, what we've seen is a break below the moving average and a rally back up to them. And people are very bullish and very excited about that. But if you don't have a period of consolidation or another short-lived pullback, then a rally back up to the moving averages, this is going to turn into the type of rallies we saw in the past couple of years in gold and the mining stock. In other words, it'll end up being a bear market trap that will lead people who are buying now into disaster. And the key thing, you know, a lot of people listening, I know, don't want to believe that, or it just sounds crazy because everyone on television is saying the opposite, that the market's just going to go up and up and up forever. But the key thing is the question you asked at the beginning, the relative strength. How are things performing relative to the U.S. stock market? And that's what people need to really look at. And if you look at that, what you see is that there's only really a few stocks that are doing really well, and most of the stock market, when it comes to individual stocks, individual sectors, are not doing well. To show you what I mean, back in July, when we were talking, I was talking about the 200-day moving average and the percentage of stocks above or below that in the S&P 500 and the NASDAQ and the stock market as a whole. And a funny thing happened in July on the 20th when the NASDAQ made a peak. More than half the stocks in the entire stock market, the S&P 500 and the NASDAQ and on, were actually below the 200-day moving averages. There's a negative divergence. At the end of a bull market, that's what you tend to see. Just a few stocks going up and most stocks lagging very poorly. Now, what's interesting is that back in July, even though most stocks are below the 200-day moving average, they weren't below it by a whole lot. You know, 1% or 2 or 3%, not a really big deal. Today, though, 25% of the stocks in the stock market are 10% or worse below the 200-day moving average. Even though the stock market has had this tremendous rally over the past couple of weeks, that means that the internal divergence, the participation in the stock market is worse than it was in July. Much worse. In fact, the only time you can see anything comparable is October 2007 in recent years. What this means is that when this rally comes to an end, and it could be over already, I can't predict that exactly, but then it could very well be over. The important thing, though, is that when the market has another pullback or decline, it's going to be much worse than the one we saw in August, because the internals of the stock market are much worse than they were in July when the worst top was made. So it's a very troubling situation. It's very difficult, though, to warn people or tell people this because, to tell you the truth, most people don't want to hear this right now. People are actually more excited about the stock market now than they were even in July.
Mike, is one of the reasons that traditionally when there's trouble on the stock market, it happens in September or October. And is there a feeling, well, August 24th happened, that's the worst, it replace what usually happens in September or October. So full speed ahead, no problems.
Yeah, I think that's exactly what's going on. And to be fair to people, since 2009, every single pullback in the stock market has been a buying opportunity. So, yeah, it was scary to see the market drop for everybody. on August the 24th. But those worries disappear once the market rallies like we've seen it do. And I think you're exactly right. In a lot of the comparisons I hear people make is to 2011. Because in 2011, that's when that so-called, it's funny how time passes us by, but that's when that flash crash occurred where the Dow fell like 1,000 points in the intraday trading and so forth. And then it bounced up and then it retested the lows, much like it did in August and then made a double bottom. So, I follow all kinds of people. I just don't look to read people on the internet that, have my views. I try to read a diversity of opinion and then come up, with my own idea. But I want to see what the arguments are people are making. So the bull argument is that we made a double bottom in September, just like 2011 after a flash crash, and now we're just going to go up, again for forever or whatever. However, in 2011, the stock market rallied up into November and then had a very fast but very short-lived pullback over about a week where it took back half the gains, and then it continued, it based out more, and then it ended up going up to new highs in the following year. The thing is that pullback that happened in November in 2011 was actually a constructive thing for the stock market. Pullbacks can actually be good during bull markets. People hate pullbacks, but they're actually healthy things because what they do is they shake out weak hands, and then you can find what stocks and what sectors are holding up during the pullback, and then those sectors tend to assert leadership. So in last year, in 2014, in October, there was a pullback in the stock market, and biotech stocks held up during that pullback, and then they went up like crazy for about 5 months. What's interesting, though, is that on this pullback, there hasn't been a standout sector that held up and now is breaking out to new highs and just going up like crazy, like biotech did last year. Instead, what's been leading the market are just basically about 20 random big cap stocks without any real fundamental correlation to one another. So Google and Amazon, they're red hot, but then you got Disney that's hot and Nike. Well, what's Nike have to do with Google or Amazon? Nothing. These stocks aren't in a sector together. They're just like the few remaining leaders. So that's what the robot trading programs are buying into. And I wish I had a method to pick out stocks that would go up like that, and lead and so forth. But I really don't. I have no computer program that will tell me which stocks are going to lead at this point when the market rallies up. I don't know what in the world, I think it just could be random. I don't know if there's any real way to pick these things out. But regardless, the key is there's no real sector that's leading the market, that's breaking out to new highs and just taking off and going crazy. And that's a very troubling sign for the overall stock market.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson. Mike, do you pay attention to trouble spots in the world when you're looking at the stock market? Could Syria turn into World War III or the South China Sea, or do you just try to stick to business fundamentals?
Well, I actually do pay a lot of attention to foreign policy and world events out of my own interest, but I don't really think they have much to do with what's going on in the stock market or what will happen. Syria, for example, is chaos. So the whole Middle East is chaos, and it's it's not fun if you live in these countries. I mean, Syria is living hell, and there's something like 50 million world refugees right now. And the only other time there were more world refugees was right after World War II. And where are these refugees coming from? They're coming from Afghanistan, Iraq, Syria, Mali, which is in Africa, and Libya. These are all countries and nations that have been totally destroyed by war and attempts upon my government, unfortunately, to try to invade some of these places or overthrow dictators or whatever and create new governments, and all these dreams and plans have failed and unfortunately created a lot of misery for people. It's really a sad situation. I mean, the last one is Gaddafi. We overthrew Gaddafi, and now that country is destroyed, and the people are fleeing that place to go to Europe and live, and we won't let them, many of them, here in the United States, but it's just a disaster. And Gaddafi was a mean person. There's no doubt about that. He was insane. But what's now happening is even worse than anything he ever did. But when it comes to the financial markets, if you look at China, right now, that South China Sea thing, they built a little island or something, and then we're going to run warships up there and play a game or whatever. And it's just that, they're playing games, we're playing games, and, I'm a citizen of the United States, my government plays games, and the communist leadership plays games, and that's just all it is. I mean, I'd go vote in a couple of years, but my vote won't mean that much. It's not going to stop whoever's the next president from receiving an order that he's going to sign off to play a game somewhere else. But the thing about China, though, is that in July there was an impact on the world markets with China, because their stock market is in a very vicious bear market. It was collapsing and crashing and so forth, and it did hold up. It made a bottom, let's say, but it didn't really sharply rally, and now it looks like that bottom is going to be retested and probably broken. So if that happens, that could, scare some people, create some selling in financial markets across the world. The point is that what's happening on these islands with the games the politicians in our countries are playing really doesn't impact the financial markets per se, but if the Chinese stock market makes a new low and continues to decline, which looks fairly likely to happen at some point over the next month or so, that probably will have an impact on financial markets. So I guess what I'm trying to say is your question is, I do, read world events, but in the end, it's really the financial markets and how they interact with one another that impacts the stock market and so forth, and not so much a war or whatever. I mean, we're not going to have World War III, so and if we do, you can just cut the computer off and forget about it.
Yeah, I've heard if we have World War III, World War IV will be fought with sticks and stones.
Yeah, actually, that's what Albert Einstein said.
Well, I bet you it's not wrong if that happens. We won't be around to find out.
No, exactly. So I don't worry about it. And regardless, I mean, what can you do? Well, you can own, have some precious metals stored up somewhere and have a gun or a couple guns or maybe a dozen guns and some food supplies for a couple months. That's all you can do.
The president of China is predicting that they're going to have 6.5% growth every year for the next 5 years. Does he actually have the ability to do that?
Well, he does in a certain sense, just like we have the ability to lower unemployment in the United States without creating more jobs than are necessary to create higher employment. I mean, in the United States, we've lowered the unemployment rate to below 6%, even though less people are working. I mean, you can make up anything you want. Governments are good at doing that, and communist governments make up more things than even our government does. So, yeah, I mean, they'll probably have a 5-year plan or a 10-year plan or something like that. But, I mean, there is high economic growth in China, but it's also a black box because no one really knows exactly what's going on over there. I'll just tell you 2 stories, or they're both the same story. So I'll tell you 2 stories in one story. But I know 2 people that went to China over the past year on business trips. They don't know each other. I just know them. They don't know each other, though. And both of them toured factories. They went around different areas of the country, and they told me the same story. And that is that the factories that they were touring, they saw strikes and unrest, and they were told that that's going on all over the country. And some people now in China, some of the Chinese people, are putting factories in Vietnam and India. Well, that's really interesting because what that suggests to me is that the people in China, are kind of like the United States was in 1890 or so. They don't want to work for starvation wages, and they're starting to strike and demand more money and so forth. And that's a story they're hiding from, it's not on the CNN or anything. And interesting enough, someone that I don't, care that much about, he predicted this, and that's Alan Greenspan. If you get that giant book he wrote that was congratulating himself, I can't remember the name of it. It was a giant seller, like right after he retired. He was claiming that what was going to happen in the world economy was that the people in China would demand higher wages, and then eventually, the factories would go to other countries, but those other workers would also demand higher wages, and this race to the bottom of wages and treating workers like they're slaves is going to come to an end. And Greenspan's argument was that this would eventually be inflationary for the world economy and so forth. But that's a whole another topic. But the point is that there is actually signs of chaos in China that we're not told about, and the Chinese economic numbers are something sort of a black box. Now, there's people that claim that Chinese economy is shrinking and it's in depression and the real estate market's collapsing and this and that. I don't really buy. I don't know. I don't really subscribe to that kind of talk. I think that's kind of a too dire of a scenario. I mean, we had a housing bubble and collapse in the United States, but that's not the end of the world. But the stock market in China did become decoupled from reality. It turned into a bubble. There are stories of Chinese people borrowing money to speculate in the stock market, and they didn't know what they were doing, and you can find out that sort of stuff all over the internet. And so I think the Chinese stock market is deeply troubled, regardless of what happens with the rest of the economy. But yeah, I mean, who knows? Maybe it is growing at 6%, but 6% growth is not going to be a permanent situation, and there's chaos going on there, and the Communist Party is, they want stability. They want to stay in power. And who knows what will happen. I saw something crazy last week. I went on a little vacation for a couple of days and met some family members in Las Vegas, and I was just walking around the strip there in front of a casino, and there were 100 Chinese people demonstrating for this religious cult, a full-on gang, I think they call it. I'd never seen anything like that before. Yeah, I didn't talk to these people, but that's kind of crazy.
In Vancouver, they had a permanent protest site in front of the Chinese consulate. I think that was up for 14 years before the city forced them to take it down. So I guess they're not going away, are they?
No, I mean, I saw 100 of these people. I mean, I don't like communists, but I don't. That doesn't mean I'm necessarily going to just say, well, I like these people. I don't know what they want to do, but it's just kind of, but I just think that's a sign of chaos or something, or political instability in China. And, the Chinese government, they want people, they want stability. They want the economy to grow. They're not evil or something. I mean, I don't think that at all. I mean, like I said, I don't like communists, but I don't think the people running China are like evil or something. But it's just interesting to watch. I mean, I guess what I'm trying to say is we don't really know what's going on, or we read the news stories. But on the other hand, there's a temptation for people to say, I don't know what's going on, and therefore the people, in the State Department, the CIA, they know what's going on. I'm just going to trust them to manage things. And if we look at the Middle East, they didn't know what they were doing in Iraq and all these countries, and they destroyed the whole place. So no one really knows what's happening. And people pretend they are. They get on Fox News and CNN and make statements about this and that, but they really don't know what's happening. And what I wish people would do is be a little bit more humble about what they think and what they say they think is going on.
Yeah, the most dangerous person is the one who thinks they know everything.
Yeah, exactly. And that's the truth in the stock market, too. I mean, anyone who's traded the markets or for a very long period of time has had moments when they think that they are absolutely certain about something that's going to happen, and then they make some giant bet, and that's usually, when you buy into a top. So, and the more a market moves in one direction, the more that happens to people. So here we are right now where the stock market has had one of the biggest October months it's ever had, but it's failed to make a new high. And today, as we're speaking, the market's down, but a lot of stocks are performing worse than the averages are. And but if someone just pays attention to the averages and the headlines, they may be very excited because it's gone up a large percentage over 3 weeks, but it's not at a new high. It's not time to really be that excited if you look at the real big picture of things.
Mike, thanks a lot for chatting with us.
Thank you. It's great to talk with you.
And we'll chat again in a couple of weeks.
Thank you.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.